Greetings not only to the people who joined us here on very, very short notice. Let me close this door, but thank the people that are online. I just asked, and we've got about 250 people watching online right now on various blogs, including mine, the Washington Note. For those of you who I don't know, I'm Steve Clemens, Director of Foreign Policy Programs here at the New America Foundation, and I'm here today to introduce a friend and a great American, Wesley Clark. I called Wes Clark yesterday, as I knew he was coming to town, and I just admire his work, his leadership, the things he's done, and we've developed a friendship, I think, based on both me harassing him to do stuff for New America Foundation now and then, but it's evolved into something where I respect so much what he's done, and I think he's respects a bit of what New America does. And he says, Steve, I'll be here tomorrow afternoon. So we had about 7 hours to put this together, and we're grateful to all of you for joining us. Wes Clark, as many of you know, is a four-star general, retired four-star general. As far as I know, the only four-star general Democrat that we may have. I may be inaccurate on that, but the only one. There's a few of it. Well, the only one I necessarily think ought to be or could be President of the United States or Vice President of the United States. And that may not happen this round, but maybe down the road. When I was at Invesco Field at the Democratic National Convention, I also attended the Republican National Convention, there was a parade of generals. And as the names were being called off, the crowd went into a roar of applause when Wesley Clark walked over that stage. In September of 2005, some of you may recall, I organized a conference called Terrorism, Security, and America's Purpose. It was a very, very large conference here in Washington. And it was at that conference when Wes Clark, that's when I really bonded with Wes Clark, because he was the first major potential presidential contender to call for immediate and unqualified negotiations and engagement with Iran and a broad, multi-pronged strategy for dealing with the Middle East. And when you look at the costs of various, you can look at the costs of the Iraq War. You can look at financial costs, you can look at costs in terms of life, but there are also the kinds of costs of lost opportunity. And one of these significant costs at that time was the failure to very early on look at ways of re-engaging that region and putting on a very different dynamic. Wes Clark did that. It was a great conference, but Katrina had just broke out and his voice wasn't heard as much as I had wanted it to heard. Then in January of 2006, on Tim Russert's show, he said exactly the same thing and major headlines everywhere. And there was no one else who had interest in occupying the White House that was making that statement. And I'm grateful for Wes Clark for carving out that territory and opening up the discussion, which has been important for us to do. Of course, he was a presidential contender, a candidate for the Democratic nomination in 2004. I hoped he'd be a contender and a candidate in 2008. Didn't quite nudge him hard enough. General Clark is very active in but not only the national security debates and the country policy debates, but the economic policy debates. And as we look today and see what's going on in the global financial markets, another area that I've gotten to know Wes Clark, not only here in Washington, but in New York, other places around the world, is his role in talking and thinking about investment banking and working with various investment banking communities. So he has a lot of thoughts about what is going on right now in the U.S. economy. He is author of his own autobiography, A Time to Lead for Duty, Honor, and Country. I'm going to refer to that a bit later. But without further ado, please help me welcome Wesley Clark, and we'll enjoy a good discussion with him afterwards.
Well, it's a pleasure to be with you. I didn't realize I was going to have an audience. I thought I was going to sit in front of a computer and type, and someone was going to take a picture of me typing. But can I just start by asking just how come you all are here? It's a Wednesday afternoon. Why aren't you at work? I mean, can't you go fix the economic crisis or something? I mean, are you academics, students, journalists? Who's here? How many of you are in business? Own business? What business?
Consulting.
Business.
Public relations.
Business.
Cybersecurity.
What?
I own rental property.
Rental property. Oh, that's a good business. Consulting. Okay. Students?
Students.
Where?
American University, sir? American.
Hamilton College.
Okay. So American University, various colleges in the area. Anybody working on the Hill? We didn't get a Hill audience today.
They're watching on live.
Okay,
online.
good. Well, I hope they will,
They're
because
watching-
it's a lot of important
camera
things.
right now.
What I wanted to do was have a dialogue. So I think rather than just starting with a long set of remarks, maybe I could just start by, I'll make a very quick set of opening remarks and then ask you all to ask me questions, and then let's just see where the conversation goes. National security. National security is a lot more than the armed forces and the military, because President Eisenhower said national security is really about the power of America, which is mostly its economic power. And so set aside for a moment the question about Iraq, Afghanistan, Al-Qaeda, and the Russians and the former Soviet Republic, now independent nation of Georgia. And think about the broader context. America's national security is dependent on our influence in the world. That's taken a lot of battering recently. It's taken a battering because of the fact that we haven't lived up to our values by holding on to prisoners at Guantanamo and subjecting them to mistreatment. Some people call it torture, some people call it inhumane treatment, but whatever it is, it's not anything that most Americans would be proud of if they actually saw it laid out there, and especially if they looked at what their professed standards of performance are. I know there are some who say these people are terrorists, do anything you want to them, but the fact is that some of them aren't terrorists, some of them are, and there's matters of law, there's matters of efficacy here, and there's matters of America's reputation in the world, and we've suffered. We've suffered from Abu Ghraib. We've suffered because we haven't done what people thought we would do in Iraq or elsewhere in the Middle East. We've suffered because we overreached with the idea of democratization, and that left us in a hole. But we've also suffered economically. The United States is the engine of economic progress and change in the world. It's not China, it's not the Asian tigers, it's not the EU, and it's certainly not Saudi Arabia or OPEC. It's the United States, and we have an economy that's 70% consumer, and Americans' tastes drive that economy, and that economy affects the world. We're 22% of world GDP, I think, by the latest figures, but we're such a substantial portion of discretionary income and investable income that we exercise an extraordinary influence in the markets of emerging countries around the world. So it's not a joke to say that when America catches a cold, some places in the world catch pneumonia. It's very difficult. And this economy's been through a series of shocks. There was the telecom run-up and that merged into the internet run-up, which merged into the internet collapse, and then there was Enron, and then there was all the accounting reform that went after that, and the shock of 9/11, and the economy fought its way back. But the consumer, the American consumer, was living on borrowings, and especially the borrowings from investments in their homes. And home values appreciated due to an expansion of home ownership, which led to a rise in home valuations and an expansion of the home building industry. And basically it outran people's incomes. And the way it was sustained was by reducing the impact of restrictive lending regulations. So normally, how many of you all are homeowners? So I'd say this is like 60% for the web audience that can't see this. But you have to fill out a lot of forms, and people check your income, and you tell them how much you make, and they want to see your last year's tax return and the year before that, or they want a statement from the employer saying you're employed or your wife is employed or whatever. It's a serious business. And the way it was supposed to work is that a bank loaned you the money and you bought a home. It was guaranteed by the Federal Housing Authority, FHA, back in the old days, or maybe the VA. They guaranteed the loan, and so the bank felt more comfortable trusting you. And then banks set up mortgage companies, and then they began to realize that the mortgage company didn't have to hold a mortgage. It could initiate a mortgage, get a fee for it, and then sell the mortgage. And then people realized that they could bundle these mortgages and they could strip them of their identity individually, and they could sell them in huge packages. And then because they were guaranteed by real assets, the real assets they were so tangible, they were such good collateral because people live in their homes and they're not going to dump their homes, that you could lever these assets. So you could borrow money to invest in them. And with the right leverage, a small return could become a large return. So if you could get 90% leverage on a $500 million package, then if the package went up by $50 million in value, you made 100%. And people looked at this and they sliced these mortgages several different ways. Some people got the interest, some people got the principal repayment, and they were all valued and sold back and forth in the marketplace. And then if you had this package, you then could use it to create more loans because it was as an asset that you could then create liabilities against. So it led to the enormous expansion of the economy. We were awash in money in the investment banking industry in 2005 and 2006. You could, if you were a big private equity firm, you could borrow money pretty easily. You could say, I want to buy this company. It's a $20 billion company. You say, that's a big company. How much money do you want to put down? And say, we'll give you on $20 billion company, we'll put down, let's say $3 billion. Now we like $17 billion in credit. Oh, okay, that's great. Okay, we got all this money. How much we're going to? We'll pay you 6% for that money. It was an unbelievable good deal because if you bought a company for $20 billion at the end of 3 or 4 years, that $20 billion could have grown to $25 or $30 billion. You only started out with $3 billion invested in it, $17 billion borrowed. If 20 billion went to 30, you made 3 times your money, put $1 billion aside in interest and repaid those loans, and everybody was happy, provided you could, of course, get into the investment. Normally, you have to have $5 or $10 million to join one of these private equity funds. Anyway, all that's unraveled because the loans that we made to let people get into their homes, they weren't properly regulated. So some people could get in with an alternate, what they called an alternate A mortgage, in which case they didn't have to show proof of their income level. And some people got in with a subprime, in which it was clear they couldn't actually afford the home, but that they were expected to be able to afford the home, and they would get an introductory low rate, which would then escalate at some later time. And so this whole process, and this is several $1 trillion worth of housing, and the Alt-A mortgages are estimated about $1 trillion. So these Alt-A mortgages, the first problem has been the subprimes. And they were started in 2005, and in 2007 they started to recalibrate. So you went from a 4.5 or 4% introductory rate to a 6 or 7% introductory rate. Couldn't afford it. Went into default on the mortgage, and that's what started the downward spiral, and it's continued, and now it's moving into Alt-A. So this is very serious for America's national security because it's connected to the economy and it's connected to America's influence in the world. And you can see the markets reacting overseas. So I'm very concerned about the economic fundamentals in America. I know John McCain doesn't any longer agree with what he said the other day about the fundamentals are strong because we're wonderful people, but the processes were broken and they've got to be rectified somehow. War in Iraq is I give Dave Petraeus a lot of credit and the United States military. Never bet against the United States military. We're really, really good. It may have taken, 5 years instead of a year. It may have cost a whole lot more, let's say $3 trillion instead of, as Paul Wolfowitz said, it would be paid for by the Iraqis. But eventually, if you leave them there long enough and suffer hard enough, you're going to get something out of it. We don't know what yet. But I'm proud of the men and women in uniform because they've done everything the country asked them to do, and I'm proud of the Democrats, particularly because they've been able to separate the troops from the partisan resistance to the Bush policy. Iran is out there as a challenge. They're walking the line carefully. They want influence in the region. They don't want a war with the United States. They just want to be the biggest country in the region and then dominate the Gulf and then repress the Saudis and become the center of Islam. over the long term. They don't want a war with the United States, but they want to bump the margin as far as they can. The Israelis are worried about the Iranian nuclear issue, and Russia wants its due as a great power in world affairs. So there's a lot going on. But fundamentally, if we're talking about U.S. national security right now, I hope we're looking at the economy. So with that as a kind of introduction, let me stop there and ask for questions or dialogue.
Excellent. We'll have a good discussion. Thank you very much, General Clark. Let me open things up. You've pitched this so that appropriately, so that the economic issues are considered national security ones, which I think is an appropriate lens. There are national security issues I'd love to get into. I remember when you spoke in Chicago at the yearly Coast Convention, you called on President Bush to stop hiding behind David Petraeus. It was a great line, and so we may come back to that. But on the economic front, when you look at the amount of fear out there about what's going on right now, if you were president, if you were advising the next president, what do you think the real urgent action items are to move forward to deal with the level of fear out there in the markets?
Well, there's no doubt that the failure of these big investment banks creates international palpitations. And people are very worried about it with their investments, but the people who run the financial community are very worried because they don't see any bottom to it. People have been put together to try to unravel these securitized mortgages, and essentially, as far as I can understand, they've mostly failed. They can't quite take a single mortgage and then run it back to the family Jones living in Indianapolis that bought a house for $150,000 that today is only worth $60,000, but the family could pay for an $80,000 house, but they don't want to because their mortgage is for $150,000, and they're therefore sort of waiting and in negotiations with the bank. They can't quite run the rabbit all the way back down through all the derivative structure of this, at least as it's been explained to me. So what's happening is that every quarter, under an accounting rule known as mark-to-market, when you look at your balance sheet and your income statement and you have to release your financial earnings at the end of the quarter, then somebody looks at this and says, hey, you were supposed to have $10 billion worth of assets here in these home mortgages, but you couldn't sell those things right now. You couldn't sell them for $10 million. You could only sell them for $10 billion. You could sell it for $8 billion, maybe 70 cents on the dollar for that. So we'll go back to our accounting partners and we'll give a best guesstimate of exactly what this is worth. So they go back and they give you the firm's standard. This is all post-Enron accounting. So this is worth 73 cents on the dollar. Said, oh my God, we've lost $270 million or $2.7 billion in the quarter in terms of our net worth as a firm. What can we do? Now everything's out of whack. We made $500 million, but we've lost 2.7 just on the assets that have depreciated. Every quarter this continues because there's no bottom in this market because it's continuing to unravel as these new sets of mortgages come into the zone in which they have to go from a 4.5% or 5% interest rate to a 6 or 7% interest rate. When this happens and when these firms devalue, they seek credit. They seek money and infusion to balance. They take that money out of the banking system. What the commercial banking system does, despite what the Fed wants it to do, is the banks then tighten up. They are less likely to give loans to businesses. So if you're a small business, say, hey, I just need to buy this new set of electronic stuff. It's $500,000 for my firm. I've got an order. I need this. It's a kind of commercial credit transaction that small businesses do all the time. Suddenly they can't get the money. Or it's like, show me the contracts first before, well, I can't get the contract because I don't have the, no, you won't get the money unless we know you can repay it. We don't know if you can repay it unless you have the contract. So as this works through, this is a deepening crisis. If you're going to fix this, you have to fix not the superficial top end, but you have to fix the bottom end where the crisis is being initiated and driven from. That's the housing market. And what's the best way to fix it? Well, that's what we should be looking at. An easy way to start is to consider a moratorium on raising these interest rates for the subprime and the Alt-A loans when they come in the zone to be raised. Normally, you know, when you get an adjustable rate mortgage at somewhere at the 3-year to 5-year point, it says, aha, well, your mortgage will recalibrate to market rates plus, 100 basis points or whatever. Just say, no, it's not going to recalibrate. 5-year moratorium, we're going to get all this sorted out. Till then, you continue to pay your same low introductory rate. Now, this would immediately impact the markets, and they would scream because these securitized obligations that they have stacked everything into are based on the value of the cash flow coming out of the mortgage. And when you say it's not going to adjust, you've reduced the cash flow. So that's the way you get to the bottom of it quickly and hopefully in one step. And you keep people in the house and they're continuing to pay most of what they can pay, and the economy continues on around it. And the people that are hurt are the big financial firms that are hurt anyway right now. And they are all hurt with this. Senator Clinton proposed this back in February or March, as I recall. It didn't get much discussion. It didn't get much traction. These are arcane issues, and it's really hard for people to get into the mechanics of this. But I think the takeaway is, I understand why we did what we did for AIG. It was a very frightening moment, and there's a lot of people's insurance and a lot of international connections. I understand that. But we've had 12 months to look at this unfolding crisis, and we still haven't gotten to the root cause and addressed the root cause, which is millions of Americans are living in homes that they probably should never have moved into on a standard mortgage basis. We, the American people, from top to bottom, helped them move in there. There's no point in moving them out and leaving that property unoccupied, and you're not going to take people in bigger homes and say, your home's not worth as much, therefore we want you to move out of your $600,000 house and occupy this $200,000 house that the people couldn't afford. That doesn't work. You can't move down on a housing scale that way. And so the common sense approach is to work the bottom. And if one approach is to freeze these adjustable rates, there may be other approaches. We should look at that, and we should get to the bottom of this and then worry about what happens on the quarterly earnings statements. Instead, we're living in fear with each end of the quarter as to how much these banks and these other financial institutions are going to, oh God, how much will they write down this time? Well, we know what's causing it. So why don't we, as a nation, demand that our leaders address it?
Let me just to open the floor, but one last question to tie it into the international area. When you and I were in China, about a year ago, and we saw elements of this, and there had been a lot of clamor about China exporting, high lead-based products and poison dog food and stuff like that. When I go around the world today, people complain about us exporting poisoned financial products, that the fear about America, the sort of bastion of capitalism, we do it all right. Do you think, when you think about a superpower, that is a superpower in part, the mystique of a superpower is other nations not knowing our limits, either national security limits or economic limits, that we've now already showed certain kinds of limits in Iraq, Pakistan, Afghanistan, etc. Now we've taken the sort of other shoe and shown, I think, quite demonstrably real limits on the economic side. What do you think what are the international ramifications of that kind of puncture of American credibility as a, the nation that got markets and regulation right?
Yeah. Well, it's dangerous. It's certainly not what we want, but it's also not something we can't recover from. Every nation at one time or another, as it moves forward with its economy, bobbles the ball. We bobbled the ball here. The question is whether we can get it back in, grip it, and recover it or not. Japan got into a lot of criticism during the 1990s because they had an overpriced real estate market. They just couldn't quite, according to the financial community, they wouldn't bite the bullet and fix this thing. And as a result, the Japanese stock market just puttered along. It never rose. Investments were cut out in Japan. And it was a 10-year dry spell for the Japanese economy, which before that had been one of the real power economies in the world. We don't want we don't need that to happen in the United States. We're very innovative. We've got tremendous opportunities in this economy. We're still the largest integrated market in the world, the most powerful market in the world. We just need to grip this problem, but we're going to have to see through it beyond the quarterly earnings statements and all the fear and trepidation that comes out of those statements.
Let me open up the floor. Jed Schilling?
Yes, thank you very much. It's been very interesting, and I want to follow up a little bit on Steve's last question, which is, given that unlike most of the previous financial crises we faced, huge amounts of American securities and bonds are held overseas, hundreds of billions of dollars in China, Japan, and the Middle East, and places like that. How does that link up with our national security and the way we deal with the financial crisis, where it affects not only our domestic market, but our relations with some of our major trading partners or suppliers of fuel and things like that?
Well, a near-term risk would be that someone would look at the value of the dollar and say, hey, you know, there was a dollar rally and it went up to a 138 to the euro, but it's headed back down. And if you were an oil producer, maybe you'd say, gee, I just can't afford it anymore to keep to denominate my oil in dollars. This would further reduce the demand for American dollars and send the dollar plummeting. It would put us at a further disadvantage in terms of the expense for importing oil, I think. And it would have a lot of other ramifications in terms of the benefits we get from the role of the dollar as the world reserve currency. I don't think that's likely to happen. I think the real thing you have to worry about in this case is the American consumer and the perception of an effective American government. The American consumer, because the longer this goes on, the tighter the credit controls, the more restrictions on business that result from this, the more the economics of the financial sector seep into the broader economy and affect the consumer as a whole in terms of job losses and lack of economic opportunity for business expansion in America. Confidence in the government in the sense that if the United States government's effective, if it grips this problem right away, look, economic power is economic potential. It's not how many dollars you can plunk down at the counter today because there's nothing specific to buy over there except maybe oil. It's about nations look at the United States and they say, is this a good place to invest? And they're so powerful, and what are they doing right now? And do we want their intellectual property, and should we send our students there? And it's a broader array than simply a snapshot. It's really about whether we're going to maintain our role as a preeminent economy in the world. Certainly that's maybe at risk, but we certainly haven't lost that yet. What we have to do is grip this issue, and that's what hasn't been done.
Let me get my colleague Mike Lind, who I should mention has his paperback version of The American Way of Strategy that's just come out. We'll be doing a program with him on September 26th.
Thank you. My question, General Clark, is the 1930s, the Roosevelt administration passed the Glass-Steagall Act, which in response to abuses by Wall Street separated commercial savings banks from investment banks. In 1999, the Clinton administration and Congress repealed it. Because of the repeal, you now see investment banks seeking to be bought up by commercial banks, which have a big capital base in the form of deposits. Do you think the repeal of Glass-Steagall was prudent? And if not, do you think there are any dangers involved in it?
Well, I think when you look back at it, Glass-Steagall was one of several regulatory issues that wasn't quite managed the right way. It's always in the nature of businessmen to say, if I just didn't have to worry about this regulation or that regulation, I could create a bigger firm and make more money. And that's what businesses do. That's what you want businesses to do. You want businesses to look for opportunities. You want government to be prudent in managing risks. Glass-Steagall was put in an era where there was a lot less efficient flow of information about the economy and in the economy. And so it was a sort of broad meat-axe approach. But maybe there's a requirement to relook some elements of Glass-Steagall. I know over the weekend the Fed apparently approved, and I have confirmed this through a commercial bank, but I haven't seen any real discussion of it, but there's a wall in banks, even after Glass-Steagall was removed, about using their deposits to finance investment banking activities. That that wall was removed by the Fed or the Treasury over the weekend. And it's
Over
one
the weekend, over this last
over
weekend?
the last weekend, yeah. I asked why this was done, and I went through a large commercial bank, and they went back up through their channels, and they explained, well, it was to expedite the ability of banks to get liquidity. That is, to be able to use their deposits to, to chase fleeting assets. In other words, it's just one more safeguard that's been
Sounds like the things Japan
shortcut.
used to do, that we used to get
It's-
upset about.
It's what happens when people are really focused on the near-term problem and are trying to work within the constraints of sub-optimization.
So
and
you're
they
saying
haven't
the
seen the system.
FDIC is gutted right now, and
No, they say the FDIC is still solid, but, you know, on the other hand,
the operative, they say.
well, you have to
Yeah,
put money
yeah.
into the FDIC. If, you know, some people are saying banks would fail, and I'm not out here to preach a panic. I'm out here to ask the government to get to the bottom of this. I don't think there's any reason for a panic. I think the government needs to okay, we couldn't fix Lehman. There was no reason to fix Lehman. We were worried about AIG because of the international connections, because of the insurance side of it. But let's get into what's driving the crisis, which is the continuing devaluation of these big securitized loan obligations that nobody understands, that are driven off of residential property, and work the residential property issues rather than treating it superficially. As far as FDIC is concerned, there's billions of dollars in there to pull, to reassure depositors, and I guess if Congress was required to, they could put up to it. I think there's something like $1 trillion that are FDIC insured. Probably after this week there'll be $1.5 trillion or more that meets the regulations for insuring by FDIC. There's somewhere less than $50 billion under the control of FDIC. But look, that's the United States government. They said they'd make it good. I believe it. I think that rather than worrying about fear and what could happen, I think we should implore the government to act within its power to get to the bottom of this, rather than waiting and hoping that each succeeding quarter is going to see it through market processes automatically reach bottom.
So here's a good voice here. Alan Mendelowitz of Federal Home Loan Finance. Did I have that right? Yeah, yeah.
Alan.
How do you see it, Alan?
Two different questions.
Yeah.
I'm going to really ask one about
Right.
regulatory structure. The actions of the Fed, beginning with Bear Stearns, has basically redefined the protected payment system in the country. Up until the Bear Stearns action, the payment system was depositories. And in return for being part of that protected payment systems, the depositories were subjected to regulation, and two, they had to pay themselves for a risk-sharing arrangement, which was the deposit insurance fund. The actions subsequent to Bear means that the Fed has extended, the government has extended this notion of the protected payment system to investment banks, insurance
That's right.
companies like AIG, et cetera.
And how do you feel about that?
Wait, and so they've now got the benefit without either the regulation
That's
that
right.
the depositories have.
That's right.
And without the self-funded risk-sharing arrangement. Remember,
right.
the banks pay for their own examinations, they pay for their own insurance fund.
American security guarantees in Georgia.
So the question
keep
question
digging
is,
deep,
how do
I don't
how do you see changing from a policy perspective? I mean, what's been done up till now has all been ad hoc, without policy, without really. I mean, I'm not a big fan of what's happened, not in terms of the specifics, but the fact that it was a result of an absence of a policy process and a classic, investment bank response: one-off, do the transaction, try to keep things afloat for the next
Sure.
weekend.
That's exactly
so,
what it
So the
is.
question is, how do you envision a new regulatory regime for the financial markets that reflects, one, the expanded nature of the payment system, and secondly, how do you structure a risk-sharing arrangement where the new members of the protected payment system have to pay for the risk-sharing?
Yeah. Well, I think you have to start with some basic principles of the market. First of all, that the federal government should cover as little of the market with taxpayer insurance as possible, and the insurance that's out there should be self-paid by the market to the greatest extent possible. Secondly, that which the government insures, it has a right to hold to certain standards of insurance. And obviously those two principles have been violated in this case. Now, short-term expediency. It was the need to take action. It was the fear of the consequences of not taking action. The 1920s casts a long shadow on this. But what we should have discovered out of the lessons of the Great Depression is if you don't get to the cause of the problem, all the Band-Aids in the world don't help. So what I would prefer to do, rather than believing that we needed rather than focusing primarily on a new regulatory regime for the broader network of coverage, I'd rather see us reduce that network of coverage as rapidly as possible by getting to the basis of the problem, which is in the residential mortgages, before it goes over any further into the commercial real estate sector and into employment and job opportunities in America in general. And I think that there's an opportunity to do that. It's very hard in a presidential election year, and Congress is going out of session, and these things can't be done without some extraordinary work. But I think the primary requirement is first the willingness of the government to face up to the problem. I mean, it hasn't yet confronted the realities of the mortgage situation in terms of what to do about it. It's band-aiding the consequences, and these consequences are going to continue quarter after quarter. So that's probably not the answer you're looking for. You're looking for some specific regulatory steps. But I'll tell you that first I would deal with the causes of the problem, and then I'd go back and look at how much protection commercial deposits deserve in a banking system and how small savers deposits can best be protected. I'm worried that that's eroding as we're putting the Band-Aids on, and that's sort of my first concern right now.
Cha Chen?
Yeah, Chow Chen, Bethesda, Maryland. General, thank you for your comment. From Enron case to current events, my perception of the basic problem is the greedy and the corruption of the people in the Wall Street. How come I never heard of these two words come out? And second is this, we depend on the Chinese money, Japanese money, and printing machine. When this day going to end? And then derived from the Steve question, should anybody look into how much money China and Japan have lost from current events? Thank you.
Well, first of all, I don't think greed is a particularly American phenomenon. We don't have any monopoly on it. It's deeply embedded in human nature. There are many other societies in which greed runs rampant, and just like there are people in our society who want it. And basically, the whole notion of the modern economy, since Adam Smith and the invisible hand, is that people can best serve the general welfare if they promote their private welfare. And despite the best efforts of Marx and Lenin and Stalin afterwards, we weren't able to reform human nature to take away that self-motivation, and communism failed. So I don't see that there's anything wrong with this. You just have to balance the private interest and private good against the public good. And this means that free markets, in order to be free, have to be properly regulated markets. And you learn things from going through those markets, and we've learned a lot by going through this experience. We just haven't had time to act on all that yet. So what I would say is that, we just need to, it's not about pointing fingers, and if you offer a CEO $100 million to run a company, most people would take it. Some people might not. I mean, some people might say, no, I'm not worth that much. I mean, I'm worth only a couple of million, but not $100 million. But most people will.
Mike Lynn and I have defied all of those people who've tried to make us rich.
Most people believe they're worth a lot more than they're paid. I mean, that's just the way it is. And so you want to use human nature, not try to ignore it or try to pretend it's not what it is. So China and Japan, all countries who invested in U.S. dollars, maybe they've lost money, but they've also gained opportunities, and they're into a reserve currency that's much more fungible and much more usable than, let's say, if they bought gold bullion. And it's something that's given them opportunities and political opportunities here. and it's enabled a wholesale expansion of the world financial system that's unprecedented in human history. You know, back in the 1960s and 70s in this country, we used to dream about how could we ever help lesser developed countries raise their living standards so they weren't impoverished. And people wrote long scholarly treatises and created theories, and there was a lot of finger pointing. People accused people in developed countries of manipulating the terms of trade, and we went through import substitution as a theory where, you know, I'll build a Ford in Argentina, but only if 90% of the parts are made here. And one by one, all those theories have sort of fallen by the wayside because people realize that if we're all in this together and pull together and work together, we're much more powerful. And that's promoted the World Trade Organization and the global economy. And this is one of the growing pains along the way. We just got to make sure it's a growing pain and not a crippling injury. And that means facing what's causing that now. And there's no country with a better leadership system in the world, in my view, to face it than the United States of America.
Yeah, right here in the right corner. That's right.
Thank you. My name is Wolfgang Schaefer. Today in the Wall Street Journal, Nick Brady and Paul Volcker have proposed to establish another Resolution Trust Corporation, as was the case during the early 90s, to save all the savings and loans at the time. Do you think that's a good idea, to have a more systematic approach than the deal-by-deal salvage?
Well, clearly we need a more systematic approach because I'm trying to say you can't lurch from quarterly earnings statement to quarterly earnings statement because every quarter there's bad news unless you seize this problem. But maybe somewhat differently than the Resolution Trust Fund. First of all, this is a much bigger problem. You're dealing with $1 trillion, maybe $2 trillion worth of assets in the American economy, not $400 billion if I've got my memory correct on RTC. But also you're dealing here with a lot of individual homeowners. And their welfare is critical above and apart from the welfare of the financial system. Because if the American consumer if you can't send the kids to school, if you can't continue to participate in the economy, if you're thrown out of your home, if your economic future is jeopardized, you throw the economy into a deepening spiral. So what I'm asking for is some help to address the ordinary American homeowners who were only doing what ordinary people will do. If they offer you the chance to live in a $300,000 house and you thought, gee, I never thought I could afford a home as beautiful as this, but since they're offering it, I'm going to take it. They took it. And now, you know, all of this comes down on their shoulders one way or another, and I wouldn't want to see an RTC-like organization that ended up saying, you're out, go rent an apartment somewhere. And so that's why I'm suggesting considering the idea of the moratorium on the recalibration of these mortgages. Keep people in their homes while we solve this problem.
Yes, ma'am.
Hi, Jody Westby with Global Cyber Risk. General, you're right about the homeowner and the mortgage moratorium, but as I understand it, there's another element to this, and that is that these banks who were buying these bundles were buying them with borrowed money. And so then as the person behind started calling the loan and the borrowed money, they were counting on all the mortgages to pay it off, and they got caught short. They didn't have it. So they were selling these to international entities. So to Steve's point of we have a poisoned economic product out there, that it's causing a real ripple effect that's so frightening because of the globally interconnected economy. Our financial levers aren't working the way they traditionally work. We don't really know what's going to happen. But it all comes back to your opening point of when you're out there with that kind of international ramification, just like we've seen with how we've lost some of our credibility with national security and foreign policy issues. We saw countries like Syria step in, Turkey, the European countries stepping into areas where we normally would be a global leader. Now we see the European Central Bank kind of like, hey, we were right all along. If we lose power economically, that puts our military and our diplomats in a very different position. Our soft power is impacted. And so I think the ripple effect of this would, I can't imagine. I would welcome your thoughts on where that's going to come, because I think it's all going to spill into a soup that we have never experienced before.
Well, I think it depends on whether or not, first of all, you've expressed the ramifications of the problem well, and let's hope that it doesn't go to that level, and that's why I'm arguing that we need to address the fundamental cause. If you put a moratorium on hikes in these mortgages, you'll definitely impact the value of the securitized debt obligations that are out there. And, but they've already been discounted. So instead of discounting them 30%, some have been discounted, which is about what you would, I think, discount if you took away the out years where the mortgages were increased, where the payments were projected to increase, that you end up with something greater than that simply through the uncertainties of the market, where people say, look, we just don't know what's out there, but we're not giving you more than 50 cents on the dollar or 40 cents on the dollar for these securities. And so that damage is done. And what we need to do is lock families into their homes as best we can and set our minds at rest on that while we sort out the financial superstructure that supported all that.
I want to go to this person here, but before that, I want to raise something. We had George Soros speak here about 8-9 months ago, and when his book came out, I think it's called The New Financial Paradigm, and George echoed a lot of what you're saying, in that he said the fate of a central banker is always to lose, as he looked at it as sort of an investor against central bankers end up creating trends that they themselves can't continue. But he was trying to give, Alan was there, trying to give counsel, I think, to central bankers looking at what he saw evolving as this housing collapse. Mm-hmm. And he basically said very clearly, you must set a floor. And that sounds like what you're saying, you must set a floor. And when the Fannie-Freddie action happened, he said that's not setting a floor. That will not do any of the things to undo the dynamics of what's happening. And what I'm interested in is, you're right, Hillary did raise this issue about a moratorium on these differential interest rates. You've made the statement. Soros, who may be better known here politically, but he happens to be a pretty good investor, and I'm sure he's betted. I mean, I think he bet. You know, he put his money where he sort of saw things going, and I think he's probably the only one doing well. But maybe you are as well. But my point is that do you think you're being heard? Because I keep hearing people saying a floor needs to be established. None of that has happened. You've got to keep people in their homes, and then you hold that line. And then from that, you then get other sort of cascading set of reinforcing trends that can then take you out of this.
There have been several housing bills, and Barney Frank's put in a good bill, and people have tried to set up a system where there was an appeal before you get thrown out, and everybody knows banks don't want to throw you out of their homes. But this is down to the eaches, and it's a 90-day period, and people have to apply for it, and sometimes it works and sometimes it doesn't work. And the answer is no. I don't think we've done a very good job of setting the floor. But when you say set a floor, it means different things to different people. And so for me, setting the floor is keeping people in their homes, because that's the best way to stop the erosion of the continuing erosion of real estate values. If homes are occupied, and I've talked to friends who've gone out to some communities and found every third home in a subdivision unoccupied, the only thing that's going to happen to the 2/3 of those homes that are occupied is their values going down too. So we should set a floor by keeping people in their homes, and we should do it with some pretty broad brush strokes at the outset. I know the financial community wants to do it on an individual basis because they don't want to say, hey, you could pay this for 6%, 6.5%. You got it at 4%. Your income says you can pay this, therefore we're not giving it to you at 4%. I mean, that's the way financial negotiations work when you're dealing with a bank, especially a bank that needs liquidity. But unfortunately, it's too slow. It doesn't work that well. And ultimately, the value at the top end is already being compromised as it goes down. Some people believe that the way you set the floor is by allowing the value of the CDOs to drop and the banks to work among themselves to sort of say, it's worth this much. But the problem is they're not on the floor. They're on the 30th floor, not the bottom. when they're setting these things, because it all goes back to the housing market. And it's actually neighborhood by neighborhood that the floor is set. And that's the challenge in this. So what I'm worried about is we've got a lot of people speaking past each other. It's great for Wall Street if these firms know that they can go up to the window and get money, because then they don't have to declare bankruptcy and they can continue to try to work the problem in another fashion. But you know, Merrill worked the problem for a good long time with one of the smartest guys around, and he basically came to the conclusion that he was better off throwing his lot in with Bank of America. And that was after 6 months. And so if you look at that, you realize there are real limits as to what even the smartest, best, most capable people on Wall Street can do given the current circumstances. Got to get policy that affects the housing market at the bottom.
Yeah, the CEO of Countrywide wasn't the smartest guy. I guess he was. He got his $100 million and got out, right?
Hey, they tell me the
Right, right.
best guys were the ones at Bear Stearns who
Yes,
were
sir.
out early.
Right.
Yes, my name is Greg Aftandilian with CNO Resources. General, I was wondering if you could say a few words about the impact of the Iraq War on the U.S. economy. And related to that is, how do you see a successful exit strategy, especially given the fact that political reconciliation has not met the expectations of those who said it would? Even though that violence is down in the country, that's an exceedingly slow process.
Well, the Iraq War has distorted the American economy to some significant extent. We've put billions of dollars of money, taken it from American taxpayers or borrowed it abroad, and instead of investing in our own infrastructure, we've invested it in someone else's infrastructure. And in some cases, in their security guards and paying off people not to shoot Americans and so forth over there. So there's a tremendous outflow of national treasure and a diversion of economic intent into the operation in Iraq. And you'd have to say, well, is that justified in terms of the threat Iraq posed to American security? I think the answer clearly is no. I believed it was no at the time. I think the American people now, in a majority, believe that that was an unnecessary war that we didn't have to go to. There would certainly be consequences if we were to simply pull the plug on it and say, okay, you all come home, that's it, you're on your own over there. Because this is a part of the world where we have continuing, deep, vital interests, and we will be engaged in it. So what I see is a period of drawdown, a greater emphasis on diplomacy. I think no matter who comes into power, whether it's a Democrat or Republican, they recognize that there are problems in Afghanistan. There's only so many people you're going to voluntarily enlist in the United States Armed Forces during wartime, and that troops have to go from Iraq to Afghanistan. And we'll do whatever's necessary politically and diplomatically, even if we don't like it, to try to hold a lid on Iraq while we redeploy into Afghanistan and work that issue. So that's what I see. Is it a 16-month withdrawal and then there's no combat troops left? Well, you know, that's certainly a possibility, and I hope it works out that way. I don't think any of us really know what the circumstances would be, but I'm one of those who believes in launching a withdrawal, calibrating it along the way. If you want to set a notional goal of 2010 like the Iraqi parliament seems to want to do, I'm happy with the notional goal, but obviously you're going to have to look at the situation on the ground. But I've said for a long time the fundamental problem in Iraq wasn't military. It was political and it was diplomatic. So I think the surge is getting a lot of credit. I give our men and women in uniform that credit. But I think it's also true that the Iranians decided they'd had about enough of the disorder that was on their border, that it was getting dangerous, it was getting tracked back to them, and might cause a significant problem for Iran that conflicted with its other regional and hegemonial ambitions. And I think the Saudis decided that al-Qaeda in Iraq was posing a potential threat to the kingdom, and I have some sources who tell me that the Saudis put a whole lot of money into Anbar province behind these sheikhs who now support the Americans. How much money, I don't know, but I'm getting this from other governments. You don't ever hear it discussed in the American press. So I think if those forces hold and we have Saudi and Iranian implicit
So you're saying the surge was
collusion.
more than a surge?
Oh, it was one of three factors. It was the decline of the Iranians' interest in promoting the violence. because they realized the Americans were no longer going to be able to invade and occupy Iran. I mean, the original presumption, you know, was that America would march through and by force remake the region, Iran, Iraq, Syria, Lebanon, and ultimately Iran. And so their first line of defense was to keep us bogged down in Iraq. They succeeded. But I think they saw that, you know, the balance of risk was going against them, and so they tamped down the violence, told Muqtada al-Sadr to cool it, just let the Americans leave, and, you know, you'll be happy to have an Iranian neighbor. And I think the Saudis also saw it. So I think there were three factors there, and I don't want to take any credit away from the men and women in uniform, but I also want to recognize that it wasn't, the Bush administration's fundamental error was dumping the problem on the military when it didn't have to be dumped on the military, and leaving it on the military without adequate resources and adequate diplomacy in the region. And there's no telling if you went back and uncorked it and looked at it in the cold light of day and had access to the records on all sides, you might find that we wasted 2 or 3 years in this and several thousand lives and hundreds of billions of dollars that was spent unnecessarily because we wouldn't use diplomacy and the right kind of politics at the right time in the region.
I apologize, people. I'm going to take three who've been very patient, and I apologize. Helena Coven, Gary Mitchell, and Matt Stoller. Just real fast. I apologize to everyone, Joe, and others that we couldn't get to. Helena?
Hi, General. Thank you very much. I also want to ask about
We got to go very briefly, though.
military things, in particular Afghanistan and Pakistan, because you've said that you want to have a refocus of attention there.
Right.
But, you know, Afghanistan is at the end of a very long and vulnerable supply line, and it's ripping NATO apart. So why do you imagine that just sending more troops into that very vulnerable cauldron of those two countries, Afghanistan and Pakistan, is going to succeed?
Well, I don't imagine that. And I called from the beginning for a success strategy for Afghanistan. And I also tried to warn NATO when the United States wanted to dump the problem on NATO. It was as though we said, okay, you won't help us in Iraq, so here, you take Afghanistan. Well, the fact is the United States is the biggest country in NATO, and NATO was gracious enough to take the problem of Afghanistan without ever demanding from the United States a success strategy. The success strategy requires a certain degree of security, including the border regions. It requires economic opportunity in Afghanistan, and it requires dealing with the incentives of other countries in the regions to continue to stir the pot. So that means that the United States has to be fully engaged in the diplomacy on the subcontinent. It hasn't been. It means you've got to really work to control the border region. We haven't done that effectively. Instead, we are thinking that we can have an impact by sniping into Pakistan, and that's, I understand the frustration and the military need to go after those targets that they see are there and so forth, but I hope we'll find a better way of dealing with the issue, because Pakistan's too big. You can't send a Marine brigade to Karachi and say, okay, take care of Pakistan. It's 170 million people, and it's an independent nation, and until 6 months ago, it had a 7% annual growth rate. And it was a place where it was...
Just on a relative basis, Iraq used to have 24 million. I think now it's down to about 20.
But you know, this is a big, major country, so it's better if we can solve the Afghanistan problem by walling it off from Pakistan, at least militarily. Inside Afghanistan, can I just say this? There is no economic strategy for the people in Afghanistan. Afghanistan is not a unified country in the sense of some other countries. It's always going to be territorial and to some extent tribal, but it needs an economic rationale. Why don't we encourage Afghanistan to grow wheat and pay them a premium for their exports of wheat and make Afghanistan a breadbasket? I know they're growing heroin, and some people believe the answer is to use heroin as medicinal heroin, let them grow heroin, but why not just let them grow wheat? I mean, pay them 5 times the world market price per bushel of wheat. Let them invest in it. Let them have something to do so this generation of Afghans who have land in these areas can do something, and their children can be educated and build a modern economy.
Matt Stoller, and then Gary.
So, federal government's nationalized some percentage of our financial industry.
Seems like it.
Yeah.
They don't say that. the federal government, hasn't said that.
Oh, I don't mean to insult the federal government, pretending they haven't done that. But what are the implications for the next president in terms of governance? I mean, they're going to be running, federal government's going to be running some percentage of our financial industry, or at least owning entities that are running parts of it.
Well, I think there'll be a series of commissions to look at the issues, and I think the federal government will try to divest itself of the running of these institutions as rapidly as possible and reestablish a better calibrated regulatory environment for the financial community. And the hard issues will be on the boundaries of that. Someone raised Glass-Steagall. Are we going to put Glass-Steagall back in, or some version of it? Are we going to really go in and inspect the books on private investment banks or hedge funds? Do they need to be regulated? And if so, why? And what are we doing about trading in the commodities future market? Maybe you can't buy oil futures unless you're an oil company. And so maybe there's some greater determination of the purposes of these futures markets, not opening them up to speculatory and other investment purposes. So there'll be a number of these issues that get worked through. And as you normally see when the government looks at an issue, anything worth doing is worth overdoing. So there'll be an overreaction to some of these issues, and that will also have to be calibrated over time. But I think, you know, what you have to hope for as an American voter and what you have to believe in is this is a government which is an effective government. It recognizes problems, and it brings intellectual resources and legal authority and the physical means to deal with those problems in an urgent fashion. And that's what the government's trying to show right now in dealing with the financial sector, and I just urge it to get to the bottom of this and work more diligently on the housing market, which is the root cause of many of the declining values of these obligations.
Do you think pragmatism is driving the agenda and that ideology is now out the window in this administration with regard to the crisis?
That's really hard to know. I don't know. I have the tremendous respect for Hank Paulson. I think he's a very, very smart, capable, experienced, and selfless leader who's doing his best for the country as Treasury Secretary. But I don't know what the influences on him are, and everybody is shaped one way or another by their perceptions. Whether they are consciously shaped by an ideology or not, you just don't know. But I think it has to be pragmatic. We're in unexplored terrain. I mean, the economy is, and has been, on the, this is a frontier. This is a drama that's still unfolding, and it always will. It's limited only by human ingenuity and energy, and we wouldn't want it any other way. We want an outlet in the economy for the most imaginative and creative people to create wealth and bring new goods and services to the public. So it has to be pragmatic.
Thanks, General. Gary Mitchell from the Mitchell Report. Earlier this week, CNN hosted a dialogue of 5 former secretaries of state. The first question out of the box to these 5 people went like this. It's January 21st. You've been invited in by the new president to identify what you see as the top priorities in the national security arena broadly. There was, of course, a lot of talk about the need to restore credibility and the need to lean on soft power, but he couldn't get anyone to get specific, with the exception of Warren Christopher, who said, here are the first 3 things I think we need to do. We need to close Guantanamo, we need to outlaw torture in a meaningful way, and we need to announce to the world that we are taking the lead on climate change. So I'd love to get your perspective, what your answer would have been to what are those top priorities that the new president.
Yeah. Well, I don't disagree with what Warren Christopher says. I think all of them, all the secretaries of state, mention, as you say, American credibility, American legitimacy, America's authority in the world at large is the most important thing. If I were to focus on one specific thing beyond that, I would say we've got to really pay attention to our relationship with the European Union and through NATO. What we've seen is an 18-year period since the collapse of the Soviet Union in which there was an automatic assumption that stability would sort of roll eastward along with democracy. And all along, some in Russia have been saying, well, not so fast, not so fast. This threatens our interests. And we've paid lip service to it. And we've tried to accommodate it. And during the mid-90s, when we first did NATO expansion, we did the NATO-Russia Founding Act, in which we were going to compensate for the enlargement of NATO by giving NATO a new relationship with Russia. But unfortunately, we never were able to advance the principles of that act. We were never able to overcome the needs of the Russian state to re-centralize and regain its own authority and legitimacy in the eyes of the Russian populace, and come to terms with the fears and concerns of their neighbors and former members of the Soviet Union. That issue's in front of us now. It's right here, right now. So people in Eastern Europe are very frightened by Russia's actions in Georgia. Russia is rightly protesting its innocence. I shouldn't say rightly, but they are protesting their innocence, as any nation state would do caught in that circumstances, and saying, oh, no, we're completely legitimate. We were just acting to protect our citizens and so forth. And besides, who do you love more, us or Georgia? And what we've got to do, the next administration, whoever they are, has got to work through this problem of our relationships with Europe. It's a matter of national security, it's energy security, it's dealing with the fears and stability in Europe, because the European Union, that's our greatest partner in the world. They're the closest to us in values, the closest to us in our outlook on the world. They are about equivalent economically and population-wise, and we're the greatest investors in each other's countries. And so we've got to strengthen that relationship. I think we need a new Atlantic Charter in which we and the Europeans agree that we'll first bring our security concerns to each other before we try to address them separately. We need to have a much deeper relationship with Europe than we have exhibited over the last 8 years, and in turn the Europeans need to accept a greater relationship with America. Perhaps with a new president in France, that makes that more possible. But there are always challenges, and Europe is still Europe, and it's got its own concerns internally in terms of producing unified policy. That would be, I would say, a starting point. And in that context, then you address the issues of climate change, and Guantanamo, and human rights, and the anti-torture provisions, international organizations, and working together to create a success strategy for Afghanistan, how to extract our forces from Iraq, how to deal with the Middle East problems, and obviously how to give Russia its appropriate weight and due respect in the world in a way that doesn't compromise the sense of security of others in Europe.
Please join me in thanking General Wesley Clark. Wes, thank you so much. Thank you. You're welcome here anytime.